Good morning. It is 8:02 a.m. Chicago time on Tuesday, the 26th of September, 2023. Thanks for coming in here today. Despite the action, it is 8:02 a.m. Chicago time here. Do you want a weather report for Chicago every morning? Is that what you want? This is episode number 2544. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so here's the thing. This market is really just churning. So looking at the convergence trading pre-market summary sheet, nothing special, mild risk off. Europe actually bounced, caused the bounce. Yesterday was the Asian session rallying, the European session coming in exactly at 2 Central, 3 Eastern. When the European markets closed or opened, the Europeans came in with both fists out, selling the heck out of the thing. And so we sold off, and then we ended up bringing all of that back in the day session, right? We ended up breaking the overnight high yesterday, 1 minute, less than 1 minute into the close. So we ended up taking back all of the selling from Sunday night and Monday early morning session, Chicago time, and the day session. Today, we rallied into the close yesterday, and Asia sold, and Europe bottomed back. So the exact opposite. And what does that tell me? It's telling me that we're in a churn. This is a market that is trying to price things in. There's not much to price in. As you can see on the sheet in front of you, news flow is quiet. Sentiment is negative in Asia and Europe, mainly recycled catalysts, the Chinese market, Chinese real estate market, the Treasury, and then of course the U.S. government shutdown is adding to the mess, because the shutdown, although it doesn't completely shut down the government, the key element here is that it delays all U.S. government statistics, which the market is relying on currently to assess the condition of the economy and what the current market regime is. Okay, so one is the labor, the Bureau of Labor Statistics from the Department of Labor next Friday. The non-farm payrolls report. Basically, if the government shuts down, we're not going to get that report. So it just leaves us in limbo. So this is what's crucial about this saga between the government, the congressional Republicans and the Democrats and the president, and this mess that this highly contested, tormented relationship we have within our government, with us being the children watching them fight. That's what that's all about, and that's the only place where it's worth paying attention. For today, there really wasn't much in terms of the overnight. We had ECB's Lane talking at 3 a.m. Eastern, and then it brings us to the Case-Shiller numbers, which came out this morning stronger. Case-Shiller price year on year came in at plus 0.1, was expected at negative 0.3. The prior is negative 1.2, so quite an improvement. And then the Case-Shiller home price month on month, the prior 0.9, the current 0.6, the forecast 0.7. So month on month for July, and this is very, very lagging, is a little bit worse. Year on year is better. 10 o'clock, we get the consumer confidence number from the conference board, looking for 105.5. The prior is 106.1. And at the same time, we get new home sales. And then Fed's Bowman at 1:30 Eastern. The API crude oil stock change about a half hour after the cash market closes. Business confidence out of Korea this evening, and the monetary policy minutes out of Japan. That's what's on deck. For the S&P, we are balanced. Balanced. How do I know we're balanced? I'll tell you in a minute. The volume is pretty good, though. The volume is 250,000 contracts. A reminder that the volume I'm counting as part of this calculation includes everything outside of the RTH session, which means that we also include the hour between the US stock market close and the actual session end in the index futures. So if my number is different than yours for the session so far, that's the reason. 251,000 251,000 is relatively high in terms of volume for the overnight session. There's quite a bit of activity there. The inventory is 97% short. We sold off immediately on the open. And again, we have 38 points of range. Yesterday we had 40. Okay, let's take a look. Yesterday, the expectation. Oh, it looked like I'm praying there. Let's see if we can get something better going here. This is from yesterday's video. Okay. The primary scenario yesterday that I was looking for it because of the one-time framing down and because of the fact that we've pushed some really important levels, the 43.80. We've moved away from the 43.83 and we've pushed through the 43.50 in the overnight session, getting down to 43.38. The expectation is it's very likely to have a hard time holding on to the prior day's range. Okay, the prior day's range this is kind of fuzzy, isn't it? There we go, that's much better. Prior day's range started at 43.57 and a quarter. And the idea is that once it gets into that range, it's likely to be rejected, and the expectation is it would go to the 43.08, which is the yearly VWAP. So, and then 42.97. That was the key expectation. Here's what actually happened. It did not do any of that at all. Completely wrong. It opened, tested down. What's going on here with this blue color? It opened, tested down, and then proceeded to just go sideways. We built a nice distribution here inside of the IB. Everything inside of the IB yesterday was a non-starter. Not really interested. Once it took out the mid here, my posture was neutral. If you're in the Convergent Mavens channel, Convergent Trading Mavens channel, you saw my comment that my posture is neutral. Once it broke the IB, now we're looking for the IB pullback, which took a while right here. And we're subject to this back and forth. The idea yesterday is we are likely to go to 83, which was the magnet up here. And it stopped short of that. It also stopped short. It just barely took out the overnight session. So you can see the overnight high, the overnight low, and we spent almost the entire session inside. And we ended up taking it out right here. Okay, we still have one time framing down. Okay, and we have sold across the entire range, missing the low by two ticks to yesterday's low. 43.50 versus 44 in the overnight session. And then the other artifact that you should be looking at is the fact that the full session mid, full session VWAP are on top of each other, and then right behind there, hard to see, in fact so hard that I should probably change that. Naked POC, let's change it to white. Right behind there is the overnight point of control right here. So we have a cluster of day generated prices, DGPs, on top of each other, and now we're selling into the open. This is a hands-off type open currently. The way it's shaping up, it is telling me that I need to see what happens. It could go either way. It could teeter either way. But the key elements that we want to look at, there's your white overnight point of control. There's your full session VWAP. Full session mid and full session VWAP right there, all clustered together. And now we're at the 43.50 level. To me, the key price threshold that I care about is yesterday's high. I'm looking for that to be broken to change the one-time framing. Otherwise, we are very likely to break down, come back in, and just form another low, another high, another lower high, lower low, with a shift in the point of control going down. So we have a downshift, and then probably a downshift today. Unless it does that, unless it turns and breaks, it's old news, really. Okay, so the overall big picture here, this is a 30-minute. You could see we're just kind of drifting down in what looked like yesterday. It was breaking higher right here. It was breaking higher. But now we're way down here. So this is a false breakout of the channel, and we're back in here. And this is very likely to drive sellers to be more dominant. So any pushback up into the 43.63 here, this area right here from yesterday, if you recall, this was the LIS. Wow, that was a great straight line. Any push to 63, I'm likely to fade. I'm looking to fade that, unless, of course, it's an impulse, at which point it's likely to be a stop. But any test of 63 is likely to be faded. I'm looking for this thing to explore down, and below the price map shows 43.08 as the target still, and then 42.97 beneath that. So if we look at the big picture TPO chart, you can see where we are. We're working through this last balance, okay? And that area is really that 80-83 area that we are currently fighting in. This was yesterday's magnet. This is where we went in the overnight session. And we're starting to work our way below that area right there with the overnight low. The overnight low being 43.44, and then yesterday we pushed the overnight low a little bit lower. We pushed it to 43.38, so we poked below this low, and that brings us into the major balance, and the major balance has a point of control, 42.30. 42.30. I'm going to tell you that there are indications now that this is overdone on the sell side. Okay, this has come a long way. This has come pretty far, and currently the price action is sort of feeding on itself, and that's why we get these swings. So with that, there are some forces in play that need to kind of settle down a little bit. If you look at the bonds, the 30-year bonds, the trend is lower. This means that yield is up. This means interest rates are higher. This is overall equity bearish. It's especially bearish for tech stocks. Here's the 10-year. You can also look at the 5-year, 2-year. Look at the bills, the 1, 3, 6 month, and you'll find that they're all pointing down. And so the yield is rising, and it continues to rise. So this is a drag right here. This is kind of keeps pushing lower and lower and lower, and it's creating a bit of a drag. Pretty good separation for the VWAP on the month to the price action. This is relatively bearish. Again, this is very bearish, especially for high monetary intensive industries, and tech is definitely one of those. Tech research, semiconductors, that sort of stuff. So this is, on a macro basis, the treasuries are not helping out at all. But on a technical basis, we are seeing this overlap. We're not seeing, this is pretty steady price discovery down, but what it's doing is it's testing testing, and opening back up. I would expect it, if it's weak, I would expect it to push into the prior range and push lower. That's how we form lower highs, lower lows. But what it's doing is it's constantly going up. Not this day, this was a runaway day. It's constantly checking up and finishing low, or checking low, finishing high, that sort of thing. So it's a bit of a grind down. I would not overcommit. In other words, I would not overcommit to the short side. Here's the Nasdaq. Again, the Nasdaq kind of took out the high and the low, but it reconfirmed its one-time framing down, finished at the high yesterday, right against the TPO point of control there and there. That's exactly what we tested yesterday, and now we find ourselves underneath that. So now 14,900 becomes kind of a check for the Nasdaq. You'll start getting clues if it takes out the 50, 60, 50 to 60 here on a retest. But the 14,900 is what they have to overcome to make it over the apex and down the other side. And then we start to break the one-time framing. Same thing in the Nasdaq. Not really interested unless we break the one-time framing on the daily to the upside. Otherwise, it just continues to be a grind sideways or down. Here's the here's crude. Remember, I was bearish on crude last week, right? So I talked about how this is quite a bearish close here. The expectation is it's very likely to rest. The expectation, the rest area is going to be between 88.75 and 91 and a quarter. And look at what you got, 91.33 on the high right here. And we're still filling in. So to me, this is starting to skew down. We initiated one-time framing down on crude. Unless it takes out the 90.56 today, I'm expecting it right back below 88.75 into 88.50, and then from there it starts to work itself through all of the balance areas below. So we start to kind of work ourselves down. So we have these three distributions now, this, and this. Very distinct action in crude. So once it clears this 88.75 area, you're looking for the point of control for the next area. This is 88.50. 88.50. If the market's not able to find balance here and react, then you're expecting 87.50 to be next. This low volume node here, 87.50, becomes the next test area. And if it doesn't hold that test area, then you're looking for what is the high volume node inside of this balance, and that brings you to 87, which is the key target we discussed about a couple weeks ago. Okay, so that crude is being much more technical and better structured, I think, now that it's breaking. And now it's really important that my mind's not going to change in my expectation that crude is likely to end up testing 88.50. Likely. Notice the words I use are very probabilistic in nature because this is all it is. We're just trading in probabilities. Unless this 90.56 high from yesterday gets broken, I'm looking for 88.50. I'm skewed to the short side. Why? Because the one-time framing down is in effect. Does that make sense? That's a kind of a crash course in both market profiling and volume profiling at the same time. Relative delta, pretty weak. Very poor participation by the very large lots. You can see there's just no interest despite this huge sell-off. Very poor interest in the large lots. Small lots controlling the auction. Not very promising to me. When that happens, when we have this movement, 38 points or whatever in range, and it's dominated by small lots, yeah, this is, this is not an ideal situation here. So we see that in the S&P, we see that in the Nasdaq a little bit. We saw a little bit of activity from the very large lots here. Crude mixed as well, and an RTY similar story. RTY had the small lots fighting the large lots, and they're lifting on the way down. The RTY doesn't make much sense to me currently. It just seems like it's just aggressively drifting, you know. So a lot of buying by small lots into the NQ, large lots starting to join up. Very large lots selling. This is another indication that we are in a bit of a mess, right? Just tracking its VWAP. So overall, the Russell is also in balance. Anyway, nothing exciting to tell you other than that. You just got to be patient. You know, we're approaching the end of September and the end of Q3 this Friday, and the idea is that there's likely to be more commitment, directional commitment coming into October, which starts next week, and then we'll look for that labor report to kick us off. Okay, good luck, mind your risk, and I'll catch you tomorrow morning. Take care.